All right, so I think we need to speak about something, and that is my plan for the next Bitcoin bear market crash. And I want to talk through and teach you exactly what the way I'm thinking about what I'm going to do with my Bitcoin. And it's going to be quite surprising because the conversation that's been happening right now amongst a lot of people is, hey, maybe I'm going to take some off the table. Maybe I'm going to lighten up my Bitcoin. Maybe I've heard about this model and that model, et cetera, right? And maybe once it hits that level, I'm going to take a little bit off the table and then buy back in a little bit later. This is now, people are getting confident now with this. Now, the problem is that people like BlackRock, the actual diamond hands ETF that's happening in the world, because I think they've had 3 or 4 outflow days since January 10th. Every other ETF that was talking about, oh, we support Bitcoin, we do this, that, and the other, BlackRock actually understands what supporting Bitcoin means, because what supporting Bitcoin means is owning it and holding it, right? So whoever BlackRock's clients are at this point are long-term diamond-handed holders. Exactly what I told you was going to happen when they started getting into the game, which is they are going to acquire as much Bitcoin as they can, and they're going to keep it, and they're never ever going to sell it. So the question is what happens in the next Bitcoin bear market crash? What are the solutions that are now emerging for hedging your position, and what are the things that you need to learn, and what are the things that you don't need to learn? And again, like I said it on another video, and it was quite popular, and that is that most people are too stupid to execute what I'm about to talk about. But this is my thinking after 17, 18 years of investing in markets of what I'm going to be doing. So that's all I want to talk about. This is not a recommendation. This is not me talking about, what you should be doing. I just want to share and compart to you what I'm going to be doing, so you can have it in your consciousness as a way of thinking. Now, here's what's going to happen, I believe. I think we're going to see a standard market decline in the next, after the next bull run. I do not think it's going to be the same depth of market decline, because I think the buyers are now different. Now, I stand to be corrected on that if the buyers appear to be exactly the same. But because, it's not just BlackRock buying, right? ARK, for example, everyone was very bullish on ARK and on Kathy's perspective on Bitcoin. But to be fair to BlackRock, ARK has been dumping Bitcoin, right? Their ETF has been dumping Bitcoin. So people that are using the ARK ETF are not diamond-handed holders like they are at BlackRock. So here's my thinking on what I'll be doing in the next bear market crash. I think it will we've seen 70-80% dips. I don't think we'll see that. I think there's less tax advantages to these new owners after this rotation of owners to actually sell their Bitcoin. And then you've got things like what I'm about to tell you that are coming into the game, right? So I think we're going to see somewhere between a 50 or a 60% drawdown. And when you factor in long-term capital gains, it may not even be worth the average person, or even short-term capital gains, it may not be worth the average person even executing on this, because you got to pay the tax on the profit that you realize, and then you got to buy back in. But if you've had to pay a 20, 30, 40% tax, depending on where you are in the world, well, now it doesn't make sense, because you now have, even if you time the exact bottom, you generate half the yield, and then it's like, is it worth doing that or just holding on to the position, right? So those are the thought process that I believe people will be going through. And the strategy that I'm going to talk about is basically what Mark Cuban did when he sold broadcast.com and became a billionaire. He sat with his Goldman Sachs guys and they said, hey, this dot-com bubble is getting a little bit too overblown here. What do we do? How do we hedge this? And what did they do, right? Goldman Sachs organized a put option on his position because he couldn't sell his position in the market because he was locked in. It's very, very synonymous to what's going on with Bitcoin, right? I don't want to sell my position because BlackRock's in the game. I don't want to sell my position because MicroStrategy's in the game. I don't want to sell my position because the United States of America is in the game. And I don't know what's going to happen if we hit an S hockey or a hockey stick movement and an S curve adoption period where you don't know what's going to happen, right? What if, the bear market starts happening, you're 30% down, and then the mandates go out that every single fund in America should probably have, a 2 to 3% allocation in Bitcoin, and the thing just takes off. Now you're completely screwed, right? You realize the profit, you had to pay tax on that. It doesn't even get down to below your break-even point after paying the tax, and then it starts going vertical. I do not want to take those risks when it comes to my Bitcoin position, because the ultimate game is owning that Bitcoin. That is the most powerful thing that you can do. So what am I going to do, right? I'm going to use the Mark Cuban strategy with broadcast.com, and it's organizing buying a put, right? Now this hasn't happened yet on the ETF options, but I'll be doing it one way or another, whether it's ETFs, options, or MicroStrategy. Actually be doing to be completely transparent, I'll be doing a combination to increase the leverage on the downside by using MicroStrategy, right? It's another reason why I want you to subscribe to the channel, because if you're watching, this far in, based on the statistics that we have, if you're watching this far in, you're going to watch the rest of it. And if you're going to watch the rest of it, this is something that's interesting to you. So you should probably subscribe to the channel so you don't miss out on future videos like this, where we're talking about strategy and how to deal with, market movements like this, right? So I'll probably be using a combination of put options on IBIT and FBTC and MicroStrategy to give me a slight more leverage to the downside after I think we've hit a proverbial quote-unquote top, right? Now, here's the thing about put options and how they work and how professional investors look at put options. It is like house insurance, right? Every single year you pay for house insurance. You're not expecting your house to burn down on a yearly basis, but you pay the house insurance just in case. So let's say I take, a position in Bitcoin, and it goes up from 64,000, 65,000, all the way up to, I don't know, let's say 300,000, right? In this cycle. Well, at 250, I might say, okay, this is looking a little bit overblown here. So what I'm going to do is take out, I've got a profit from basically 70,000 to 250,000. And I'm going to take a little bit of that profit. I'm going to take, I don't know, let's say $30,000 to $40,000 of that profit, right? Got a massive profit. And I'm going to take, I got $280,000 of profit, and I'm going to take out $30,000 of that 280,000, and I'm going to buy a 2 or 3 year house insurance policy. And that means that in case the price goes from 250,000 down back to 70,000, they will bridge that gap for me, and I will protect my my gains. But it's going to cost me money to do it. However, as a professional investor, I'm looking at it going, I made 280 grand. I'm completely willing to reinvest 30,000 of that to protect myself, right? And so that's the strategy I'll be playing. Now, the beautiful thing about this is, let's say that we enter a hockey stick moment and the thing just goes absolutely vertical a year and a half into the house insurance. That's okay. It's not a problem, because it's only cost me $30,000 to do it. I haven't had to sell any of my Bitcoin position in order to execute that trade. So that, I think, is probably going to be the smartest way for me to do that. I certainly, anyone who's looking at Bitcoin for the long term and wants to maintain their allocation and not do any fancy rebalancing and this, that, and the other, which, I think part of the reason why we're going to see the drawdown is because of Wall Street's rebalancing habits, until they learn that Bitcoin is this asset that you're never ever going to get any more of, right? So I think there will be a drawdown. I think that drawdown will be significant. It won't be as significant as previous cycles, but I also think that there's a risk that halfway through this drawdown, we start and we just reverse and go absolutely vertical, because look what happened to Tesla, right? Tesla became a Russell 2000 must-own asset, and it went absolutely vertical. And if you were trying to play fancy games with Tesla, trying to go in and out of it, you completely missed out on that within a matter of 2 weeks. So that's going to be my strategy in this bear market. I'm certainly not going to just sit through the bear market and hold the position, but I'm also not going to sell it, right? And this is the advantage of these new innovations that are coming into the market as far as the ETFs go and options go on those ETFs, because you'll be able to hedge your position without ever having to sell your position. Think about it, right? Let's say I wanted to generate make one Bitcoin, 70,000 to 280,000, right? or let's say it goes to 300,000, but I want to buy a house insurance at 280,000. Well, normally what I'd have to do on that position is sell the whole profit, right? Realize that profit, the $210,000 profit, and then pay tax on that. Whereas now what I can do is I can realize a $30,000 profit, for example, and basically pay the tax on the 30,000 and buy house insurance with it just in case it goes down. The most bullish thing that can happen, right, in that scenario, well, I guess if it continues, if it just skyrockets to the upside like an Elon Musk SpaceX rocket, that'll be good too. But you know, let's imagine that you're holding this position and you're sitting there going, okay, it's starting to go down. I don't know whether to sell this position just in case all these changes that are happening in the market start executing and I miss out on it. And now you're riding that position from, let's say, a peak of $280,000, $300,000 a coin, all the way back down to, you know, $70,000, $80,000 a coin, and then back up again. That's one way of doing it. Certainly that's how, you know, the core of the Bitcoin HODL group has done it so far. But now with financial instrument innovation going on in Bitcoin, you'll be able to take a tiny portion of that at whatever point you think is sufficient. So let's say you hear that moron, the spaghetti boy, talking about the power opinion, and you think it's 200,000, or you hear Plan B with the stock to flow talking about 400,000. At anywhere in between that time period, you can say, all right, I've had enough. I want to lock in these profits. And what I'm going to do is convert a tiny percentage of my profits and basically buy put options in order to hedge that downside, just in case everyone here is wrong and we don't go absolutely vertical and the market comes down for another bear market cycle of 3 to 4 years. Because then what's going to happen is I'll take that profit, right? Let's say it comes all the way back down from 300,000 to 70,000. I'll take that profit on the put option, and then I'll buy more Bitcoin with it, right? That's exactly, you know, that's probably the most bullish thing that can happen, because it's going to accrue more Bitcoin to the downside. You know, it's going to be bullish if it goes straight vertical, but, you know, I won't be able to acquire more Bitcoin with the put profits. But this is the way that, you know, thinking has to start moving, because these are the players that are now in the game, and these are the innovations that are now coming into Bitcoin that have not been here for the entirety of Bitcoin's lifetime. And this is the unique thing about it. This is why Bitcoin starts becoming a more stable asset, a more interesting asset for investment advisors, because they can start doing these things with it. And of course, we talked about MicroStrategy. If MicroStrategy is trading at giving you a premium of 1.5 to 3x to Bitcoin, well, now you might hold your IBIT position, liquidate that $30,000 of profit, and just go buy puts on MSTR, because you know that if Bitcoin goes down, MSTR is going to move at 1.5 to 3x to the downside, right? Then you've got the risk on the MSTR side, because what if during the bear market they keep buying up Bitcoin because they've got passive flows coming in on the NASDAQ and the S&P. So this is how you start thinking about what are you going to do. And the reason why I wanted to put this video out now, before this bull market really gets going, is because I want you to start thinking about it. That's why I'm saying subscribe to the channel, because yeah, we can all sit here and I can make really bullish content all day, and that's great, but we have to plan how we're going to take advantage of these movements that are going to happen in the market. I'm not saying anyone should sell their Bitcoin at all, but if you're sitting there going, I've just made a $500,000 gain or a $400,000 gain or a $300,000 gain per Bitcoin, how do I protect that? I'm going to be using the markcubanbroadcast.com house insurance strategy to do that, which is taking a tiny bit of that profit, buying put options, and seeing what happens. But ultimately, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.